Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting however with this multi-year volume profile, because you can see we closed two weekly candles inside this value area, increasing probabilities price will eventually hit the point of control at 38.7k or even go higher to the value area high at 49.5k. What is however important is that commonly price likes to retest the value area high before potentially continuation, and you can also see that this area on the chart has been very important over the years. Support, support, resistance, 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 and then potentially acting as support again for continuation towards the upside. The support area is between 31.3k, which is the value area low, and 32.7k. If we then go to the daily time frame, look at the bullish scenario over here, then we have to look for an impulse to the upside, 1, 2, 3, 4, and eventually a wave 5 to the upside for higher prices. In this particular scenario, we're waiting for wave 3 to be finished, which might be the case over here, and then we're looking for a wave 4 to the downside, where currently the targets for wave 4 between the 05 and the 236 are sitting between 33.6k and 31k. If price falls too deep and hits the golden pocket over here at 29.8k, that is the invalidation, and we have to look for lower prices to follow. If we then zoom in more locally over here and we go to the 1 hour time frame, then this move towards the downside invalidates an impulsive structure towards the upside. Potentially, we were looking for a 1, 2, 3, 4 and then a wave 5 to the upside, but also the same rule applies for this wave 4 over here locally, where you don't want to see that golden pocket being hit, as that is then an invalidation for a wave 4 sitting at 35.8k, which has been wicked over here, really lowering the probabilities for this scenario, increasing probabilities for a continuation to the downside, which of course happens in waves. Now, if we look for scenarios that go towards the downside, then we have to also think about this expanding flat over here. In this particular scenario, we have a wave A to the downside in 3 waves, followed then by a 3-wave structure in a wave B as well, where the most common target for this wave B is between the 1.236 and the 1.38, with the 1.618 above being a less common target, but a target nonetheless. And you can see over here that on the 4-hour time frame, the candles are closing right on top of the 1.618, which is very nice to see. In this scenario, you then expect a 5-wave structure to the downside in a wave C, 1, 2, 3, 4, 5, where the common target for C is between the two 1.618s, which is between 33.5k and 31.6k. You can also see I got a key level over here, and that is a level that I got from the 1 hour chart, which is the high of a 1 hour gap. Over here, you can see price moved to the upside very quickly. Then the next candle was a red candle, which then eventually didn't fully retrace to the bottom of the candle. Basically, we have a 1 hour gap over here. And just like on the 15-minute yesterday, this is a very important level. And let me just show you as well what then happened on the 15-minute yesterday. As an example, we're on the 50-minute. We had the high of this gap over here, price moving to the upside. First red candle creating this gap. We were looking for this level over here, which got wicked into, and price moved towards the upside. So it is indeed a very important level. But then on the 1 hour chart, which is also inside the wave C target area, which makes it very interesting indeed. If we then go back to the daily time frame and we also look at the bearish scenarios, as we always have to remain neutral, we are here looking for an ABC expanding flat scenario, where again preferably the daily candle is closing below the 1.618 pulled from the high to the low of A, sitting at 36.1k. In this scenario, we are not looking for a lower time frame 5-wave structure to end wave C over here and then a move to the upside. Instead, we're looking for a bigger bearish 5-wave structure to the downside, where the most common target for this wave C is below the low of this wave A at 24.8k and above the 1.618 that you can see, which is sitting at 16.8k. Now, in this particular scenario, we are then looking for a 3-wave structure to the upside in wave B, which then has to be a zigzag over here. And in this particular scenario, you also here want to see the daily candle closing below the 1.618, sitting at 36.4k. preferably actually a 12-hour candle, but you can see the 12-hour already closed above. And the reason why I say it is because if we're looking for a wave C to the upside and then an ABC, A being an expanding diagonal, which is already rare, absolutely not preferred. Wave B retracing to the 302, which is fine. But then in wave C, we're looking for a 5-wave structure to the upside. And this wave 2 is so incredibly short to a much bigger wave 4, it lowers the probabilities of this scenario. And if I go to the daily time frame, you can't even see the wave 2 anymore in comparison to the wave 4. So that is why preferably the 12-hour should have actually closed below below the 1.618. So this lowers the probabilities of this particular scenario, increases the probabilities that a retracement to the downside will be bullish for eventually continuation to the upside. If we then zoom in to the 15-minute over here and look at what has happened, then over here on the 50-minute, you can't necessarily count the structure per se. Of course, we need to give price a little bit of time, but it looks impulsive and then a potential wave 1 or A, looking for a retracement to the upside in 2 or B for eventually continuation to the downside, with the invalidation being the high over here at 38K. Now, if we look at some support and resistance areas around price at the moment, then currently it's bouncing on this white box, which was a previous target box. It previously acted as resistance a couple of times, now acting as support. However, just below this level over here, we have more support levels. And apparently I have a little bit of overlap over here. No idea where that comes from, but this box is the important one. I think this is the one I have to remove. This one, 35.2K to 35.5K, is an area of support. Then we have 34.3K to 34.5K. And then here, 33.7 to 8K to 33.9K. And then we have that key level that I spoke about earlier. Above price at the moment, we have this blue box, 37.1K to 37.4K. Now we do have news coming later today in about after this video is online, 40 minutes, 30 minutes, 8 p.m. Central European time. A red flag might increase volatility once again. Not that we're missing any volatility, but just make sure that you're trading safe around these hours. And if we then look at the probabilities of the different scenarios, then over here on the medium time frame, the probabilities are still higher for bullish continuation. Even if you get a drop to the downside, probabilities are higher for continuation to the upside, where we're then looking for a wave 4, and eventually we're looking for a continuation to the upside in a wave 5. On the low time frame, I already showed you over here, this wave 4 now is invalidated. Price hit the invalidation, which is definitely not preferred. Something I actually forgot to talk about is we also can't count this a 1, 2, 3, 4 and a wave 5 because of the overlap over here, which isn't allowed. So it lowers the probabilities for impulsive continuation, and that is why on the low time frame, probabilities are higher for the bearish and then bullish scenario, meaning a price move to the downside before bullish continuation, which can also mean that we can have a bigger 3-wave structure where potentially the high of 3 is here, and we're then looking for a much larger 3-wave structure before continuation. But that is something we have to wait and see, because that is yet too early to call. And on the micro, currently the probabilities are highest for this move to the downside to be a wave A or a wave 1, and then eventually at least 3-wave structure, if not a 5-wave structure to the downside. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.